Good morning, good afternoon, or good evening to all of our friends all over the world. This is Purposeway 22 coming at you live with my buddy Style Pigeon. We're here for Gingerly episode 4. Happy Sunday, my dude. How you doing?
Dude, I'm so excited. It's been a good Sunday already. Got me some video game time in this morning, but now I'm ready to buckle down and learn about some numbers and dive into this topic. I'm so excited after playing VR and stuff with Fibo. He's such a cool person in general. I can't wait to hear about what he actually does and his actual passion.
Yeah, me too, man. So this episode is called Fibonacci, the hidden gem. We're bringing on our good friend FiboSwanny. We hang out with Fibo every Wednesday with the Bitcoin Badgers playing VR golf. So we're going to dive into what technical analysis is and then how he uses Fibonacci spirals to predict the future like a wizard. So before we dive in, I just want to do a quick pitch for our awesome sponsor, Roundly X. Gingerly is sponsored by Roundly X. It's a simple to use app that allows you to purchase Bitcoin and other digital assets with spare change automatically. So this set it and forget it DCA tool helps you build wealth safely and conveniently over time. And it actually helped me pay off my Subaru in a time of financial stress. Thanks for throwing that up on the screen there, Nick. If you go to Get Started, you can sign up with code Gingerly and get you $4 in Bitcoin to get started. So without any further delay, let's dive in.
Okay.
Heck yeah.
Not sure what that was. Do you have it skipping around on you?
Oh, no, it played fine for me.
Okay. Just to let people know, we
FYI,
are having a little bit of technical difficulties on John's end. So just if he drops out, we'll pick up the slack. No worries. But we might have to play it by ear, as the jazz musician in me wants to say.
yeah, for sure. Nick, if you could bring Fibo on, we can go ahead and kick it off. Welcome, Fibo. How you doing, man?
What is up, my friends?
So glad to have you on the show, dude. Let me go over your quick intro real fast and we'll dive in. So for the past 20 years, Fibo has been a trader, an analyst, and a price risk manager working within the sphere of technical analysis, like I mentioned earlier, Elliott wave analysis, and Fibonacci analysis. He first learned these types of behavioral analysis tools trading cattle and grain futures for a top cattle broker. And for the past 18 years, he's used those skills as a senior technical analyst at a top energy consulting firm. He has a lot of notes for a book he would like to write one day about his threshold theory that's called Subliminal Thinking, which we're going to dive into, and I think is an amazing title. He is also a certified financial technician with a CFTE designation through the International Federation of Technical Analysts, the IFTA. Welcome, Fibo. So glad to have you on the show, man.
Thanks, man. That's awesome. That introduction makes me feel old with the amount.
Oh, dude. Official and professional, old doesn't have anything to do with it.
True. It's called wisdom, right? Wisdom.
Yeah, that's right. The experience. So I was kind of telling in the intro, we met you. I guess I met you from Paul, crypto curator, who runs several other Bitcoin live shows. But me and Pigeon got the chance to know you a little bit better through VR golf every Wednesday. And I've always wanted to kind of pick your brain about technical analysis, but because I know nothing, and I think Pigeon knows nothing about technical analysis as well. But your whole thing is Fibonacci spirals. So for those who don't know, Nick, if you could go ahead and pull up one of those first examples that we have there. What is a Fibonacci spiral? It's this cool little thing. Yeah, you can see the animation there. And how would you define it, Fibo? What is a Fibonacci spiral?
Well, the spiral itself comes from the actual Fibonacci sequence of numbers. So when you have that formula of 1 + 1 = 2, and 1 + 2 = 3, and 2 + 3 = 5, and so on off into infinity,
right.
That's where the spiral itself comes from. So that's where you kind of see all of that. When everybody puts different spirals, that's where it comes from.
Yeah, and we actually had the cool opportunity to stumble upon a Fibonacci spiral in VR. I actually included an image for that, Nick, if you wouldn't mind throwing that one up there real fast.
Yeah, when that one popped up, that was one of my favorite holes, of course.
That was a really cool experience. So you can see, thanks, Nick. I appreciate that. It's just a screenshot, but me and Fibo were playing through the Sweetopia level of Walkabout VR golf. And we come up to this hole, and Fibo starts freaking out, going, "Oh my God, it's a Fibonacci spiral." Like, what are you talking about, dude? And so we fly into the next hole, and yeah, you can see from an aerial view here that Walkabout put that in there. So ever since then, I've been thinking about, oh man, it'd be really cool to actually talk about what Fibonacci's are, the number sequence and all that kind of stuff. And from what I understand, my wife even points out to me all the time, there's a lot of Fibonacci in nature, right? Like it's a naturally occurring thing. And that's part of like the value prop of the Fibonacci from technical analysis, right? Like those patterns show up in behavioral kind of things, I guess. I don't even know. I'm not using the right words, but
no. Yeah. I mean, there's Fibonacci in nature. And we'll talk about that here in a little bit and a little more in depth, but, my mind's been warped over the years because I basically have a lens that I look at the world in that mathematical sequence. It's like, it's kind of weird, but that's the way I kind of think of things anymore. That's how
so like, you just start seeing the Fibonacci's pop out like in various places and stuff after studying for a long time.
It's pretty weird, to be honest.
Yeah, and you can see in that nature picture there, like succulents are a good one, snail shells and stuff like that. So yeah, Pigeon, were you going to say something? Sorry, I didn't mean to just keep on.
No, that's okay. I was actually, I'm always really interested in the way that nature like coincides with other things. And my whole gambit is really interdisciplinarity. Like I like taking disparate things and smashing them together and see what we get. The closest thing that I have to this has actually been thus far the Pareto distribution or the 80-20 rule, and how that actually exists in nature, where I think it's like 20% of all the trees in the world produce 80% of the oxygen, and like 20% of the stars in the universe actually contain 80% of the mass of all stars in the universe. So little mathematical things that actually occur throughout nature is always really interesting to me. But I never knew you could apply that to markets necessarily.
Yeah. And when I throw up a slide on that, I'll go a little bit more in depth on it.
Cool. I'm excited.
Yeah, me too. So, thanks for throwing up the Pareto distribution. Nick's always on it with lightning speed searching, throwing up those resources. Love it.
Yeah.
So let's dive in. So, Fibo, what's technical analysis, and like more specifically, how does it apply to Bitcoin and cryptocurrency? Because when I first heard about what you do, I was like, okay, we're taking spirals and we're putting them over a chart, and then we just know the future. So it's definitely like less magical than that, I think.
Yeah,
it's not. But
no, we'll touch on the spirals here in a little bit. But the spirals, it's really not the spirals at first. Mm-hmm. It's really the ratios that we get from the sequence itself. But cool. What is TA? I actually have my own definition that I've written down over the years, and it gets adjusted as I get older and just, I guess, wiser, I guess. But I have it written down here. It's the art of identifying the force of an emerging trend until the weight of numerous indicators and principles show or prove otherwise. So in other words, everyone talks about technical analysis as an art and also a science. And the art side of it is it's the art of it is basically the annotations and the subjectivity that people bring to the charts to find those patterns that people are making. But then it's the math side or the science side that you use these indicators to, the way I apply indicators is I try to measure the psychology or the behavior in the market, because I want to know when that mass psychology in the market is changing or switching mentality. And to me, what makes a good technician is, yes, we ride those trends, but it's when those trends are going to reverse, not necessarily trying to find a bottom or a top. It's really trying to find that reversal of the psychology, so you're more comfortable knowing that the trend is reversing, going the other direction.
That's fascinating. So, like, it wouldn't necessarily indicate an exact bottom or a top, but it's all about the trend.
Sometimes you get lucky, but to me, bottom searching and top searching is an act of futility. I mean, you can get lucky and nail the bottom, and of course, I've hit the bottom a few times here and there, but it wasn't my goal. My goal wasn't to say, let's find the bottom. My goal is to find the reversal. And sometimes finding that reversal, you might miss that first 1/3 of a really long trend, but I'm fine making a middle 1/3 or a middle or 2/3 of the trend going the other direction versus trying to find that bottom. So
that makes a lot of sense.
So,
and like from my perspective, I'm always listening for the DCA, and like whenever we're talking about cryptocurrency, and so like that is a really interesting perspective to me, because technical analysis may not. I always hear about it like, oh, we're going to use TA to snipe the bottom. That's what all these big traders talk about. And I think that's why a lot of people make a lot of money, is because people believe that, oh, I can pay this person and they can just predict the future. But if you're paying more attention to charts, like you're talking about, to find trends, then maybe you can adjust your dollar cost averaging strategy, to be more advantageous throughout the cycle. And it's not necessarily trying to snipe the bottom. It's just, we're going to like be more prepared based off of what we're seeing in the trend. So yeah, that's really cool.
Yeah. I mean, when you're looking at dollar cost averaging, I mean, that's a helpful tool to lower risk, of course. But you're also missing out of lump sum investing also.
Yes.
So, I mean, it's a give or take. It depends on risk tolerance and what you like. But when it comes to DCA, the way I look at it is like when people look at 401k, I don't really see that as a dollar cost averaging, because it's money that you've just earned and you put it into the market. Dollar cost averaging to me is, if I got $10,000 laying around, I'm going to buy $1,000 every week until it's done to get that average, correct? So to me, the way I approach the markets, I almost like to use the lump sum and take that 10 grand and put it all in the market at one time when I know that the trend is changing and working in that direction. But of course, there's more risk to that. So, it just depends on what you like on a risk tolerance. So there's nothing wrong with DCA, but then you're also missing out on possible larger returns. That's really all it is.
I 100% agree from my angle, because the DCA thing is what allows me to be involved, because I'm extremely risk intolerant. Like I don't know enough to mitigate my risk properly. Whereas, if I had a tool or if I had experience with a tool like TA, I would be able to actually mitigate that risk based on what I know to some extent. Correct? Am I hearing that correctly?
Yeah, I mean, I guess it comes down to risk tolerance. I mean, that's really what it comes down to. And if the way I run my stuff is if I found that just buying every week would get me a better return over time than the way I approach the market, because I'm a swing trader, and I base it off a lot of Fibonacci, and we'll talk about that here in a minute. But to me, it's just really on how you approach it. I like to do more lump sum riding the trend than I do dollar cost averaging. But again, it takes time, it takes effort, experience. It's not something that you can just go and do. So it's something that if you enjoy it, which I do, is something that over time you grow to learn how to apply that to even reduce your risk and still do lump sum investing going in that direction.
Yeah, I think in a really cool way, TA is also just helping yourself understand your own tolerance and your own like perception of the trend. For me, as I've grown in like saving and like dollar cost averaging, I like to do, so Roundly X makes it easy, not to get overly shilly here, but like they do roundups, which are random, right? And like I think are a great complement to a regular dollar cost averaging strategy, because you have that regularity, but then throwing in that randomness helps you like adjust for the market in different trends. And then also if you throw in lump sum investing as well, I like to do that. I don't do TA necessarily. Like I'll know some basic pendant formations or, various things that I listen through, like you or Scott, Melker, various other people. And so I like to have a stack that I'll be like, all right, whenever I feel like it gets to this level, I'm going to throw an extra bulk buy-in to complement everything else that I'm doing as well. I don't know. It feels well-rounded that way.
Yeah. No, I think that's great. It's a great way of approaching it. I mean, technical analysis to me is a tool. It's not an end all be all. If you use it as a tool, as a risk management tool, because what it really boils down to, no matter what strategy you use, short-term DCAs or whatever, it really boils down to how you manage your risk, regardless of how you approach it. It's all about risk management. But I use technical analysis as a tool to help guide my risk management.
Yeah, that's a great way of saying that.
So I'm not just using TA just to buy and sell, just using TA, because then you're going to lose your ass over time. You got to really learn risk management along with the tool that you're using.
Yeah. I think maybe the bane of all crypto and blockchain people trying to get in and make it rich is that everyone feels like there should be a get rich quick thing that they do, right? And a lot of people go to TA for that. because they think, oh, we draw the lines, we know exactly where it's going to go. We use leverage, and then you're gone. You're wrecked because it doesn't work that way, right?
Yeah.
So yeah, I like that
to
tool
me,
approach.
it's slow and steady. And my whole goal is to be able to trade another day.
Right.
And if you just do that over time, your returns will be there. Are you going to make, 200%? Probably not. But, if you make a good return over time, then, patience and, just kind of
still around.
Yeah, you're still around. Exactly.
Yeah.
So just to pull this out, that's basically the compounding effect in action, correct?
When
you're adding that effort over time, and whether the margins are big or not doesn't really matter because it's adding over time to become X in the distant future.
Yeah. I guess it's the way you approach it, but I mean, the way I approach things is kind of weird. But I have a short term book and I have a long term book. And in my short term book, basically they're set up the same, but it's just the amount of money in each one. I have different buckets in each of my books, and there's a bucket for Bitcoin, and there's a bucket for Ethereum, and there's a bucket for whatever. And in each bucket is an amount of money that I am pooling to trade that particular asset. So what I'll do is I'll go in and I'll buy 10% of whatever that bucket is for Bitcoin at that point in time. And then what it does is if I look at my short term and my long term all over my entire portfolio, I'm buying 10% of that bucket, but I'm not risking 10% of my entire portfolio. So I can go into it all day, but it's kind of confusing, but that's the way I do it. So when you say compounding, the money I make in that short term, if I'm profitable over, each month or whatever, that amount of money in that bucket gets larger and larger. So my 10% entries are larger as the trend goes, as I'm following the trend. So if I'm buying and selling, I'm probably buying and selling more as that 10% goes on. And maybe I'll buy 10% and then I'll put another entry in for 20%. And then I'll have 30% of that bucket and those kind of things. So if the trend's going really strong, I'm adding and adding and adding. It's like, if you play craps at the craps table and the 8 keeps flying up there and you keep putting money down on the 8, you're kind of pushing it, right? And if that trend is going to stay, you're going to make a lot of money on the trend. And that's really how I approach it. So a lot of people ask me, man, you're putting 10% of your money down right away. And I'm like, no, I'm putting 10% of that bucket. But if you look at my entire portfolio, what I have exposed, maybe I'm only 1 or 2% of my entire portfolio.
Right. Yeah, that makes sense to me. I do a similar idea. I have a stack of Bitcoin that is the stack, and I pretend like it doesn't exist. And then I have a play money stack, and I invest like percentages of the play money stack in various other things. Like, I guess it's kind of a similar concept.
You just have fewer buckets, essentially.
Yeah, exactly. Yeah, I only have like 2 or 3 buckets that I play.
Well, I got a short term and long term, and then I got my cold storage. And
there you go.
The goal is to make money in the short term, pop it over to the long term, make a lot of money in the long term, and then put it into cold storage. It's a step process for me, but it gets
even without TA, like people listening should consider doing that sort of strategy,
or something that fits them. Yes, but
exactly. Yeah, not that exact strategy, but that's the goal. Is like we want to be stacking up that vault of cold storage that you don't ever have to think about. That's there, Yeah,
so, that's the risk management portion of it. I use TA as a tool to help me gain into that risk management. Yep.
So I'm looking at our outline here, and you've got a lot of awesome resources, which we're going to link down below the broadcast afterwards. Nick's great about putting that together. So we've got a couple resources about traditional TA, and then there are more resources here in a minute that are more like about the psychology behind TA. So could you break down, like, I guess, what traditional TA looks like in crypto, and then we can move on to how your particular bent is a little different and special.
Yeah, no problem. Now, you mentioned before, how does TA work with crypto? It really works in any market that there's basically humans that are buying and selling. So anything that's exchange traded, I guess you could say, can be applied. So it's really not crypto specific. Now, there are markets that a lot of different TA techniques work better in, like crypto and in the Forex market, when you're talking about currencies. A lot of times you're going to get a better TA results because the way I look at it is that when you look at a market like currency, like
Mhm.
currency markets. And Bitcoin could be considered one, I guess, store of value and all that kind of stuff. But
Right.
when you look at the currency market, there's so many factors and inputs that go into the price movement of a currency that it's hard to forecast all those inputs, like GDP of the country and all these different things that go on in whatever currency you're looking at. It is really hard to do a fundamental analysis on what's going on fundamentally in the supply and demand of that actual market. So people lean toward technical analysis and the psychology of it more than they do the fundamentals of it. And I think TA works better in those types of markets. Now, does it work in all markets? Yes. It's just how you apply those TA techniques to whatever markets you're looking at. So the first question you asked a while back, how does it apply to crypto? It does, and it applies to every other market that humans trade.
No, yeah, that makes a lot of sense. So, like, really, in a way, TA is trying to predict human behavior, but like groupthink and stuff like that, right?
Yeah. Well, I mean, if we want to look at it on a basic, there's three basic tenets to technical analysis. First one is the market discounts everything. So all the news, financial, economic, geopolitical, whatever the news is, it should already be dictated in the price. That's a theory of technical analysis, is that news doesn't matter.
That's what people say when they say it's priced in already, right? Like that's a common term that people sling around.
Yeah, and the way I look at it is the way I build my indicators will let me know what news matters and which news doesn't. So to me, I really don't follow the news because I like to do my technical analysis in a vacuum as much as I can, because everyone's got bias, and I try to reduce that bias as much as I possibly can by trying to do the technical analysis without wondering what the hell's going on in the world. I don't care. The indicators will let me know if something's happening in the world, then that sentiment or that overall mass psychology of the market will let me know. And that's where the indicators will kick different directions to let me know that, hey, we're moving in a trend now versus just whipsawing back and forth with people trying to figure out what the hell's going on. So that's the first tenet. The second tenet is that price moves in trends. That the whole goal of technical analysis is to find when that reversal is happening and ride that trend as far as it can. Because the way I like to look at markets is through a financial lens versus an economic lens. And I think what a lot of people miss out with is they keep trying to apply economic theory to a financial world. And to me, what I have found over time is, if you just take your basic economics, right, your whole supply and demand, you're trying to look for an equilibrium price, right?
Sure.
So let's take an example, big screen TVs at
Costco.
or Costco. If you got a big screen TV that's $1,000 and all of a sudden it comes down to $400, price drops, demand goes up and says, hey, let's buy these TVs. So that supply demand factor in the market works in economic world. Now flip to a financial lens. If the price goes, we can look at it the other way. If the price is at $10,000 for Bitcoin and all of a sudden it rallies up to $20,000, the demand doesn't go down; it goes up.
Yeah,
that's not how economics work. So
right.
you're trying to look at it with a financial lens to figure out the psychology of the market. It's the FOMO. It's people like, oh shit, I better get in before everyone else, before I miss out, and all that kind of stuff.
Right.
So you end up the mass amount of people buy at the top and get absolutely crushed, versus because I think their mentality is looking through an economic lens and looking for that fair value equilibrium price. And I don't think that's what markets are. Markets are this dynamic world that we live in that wrap around different realms of different price averages. So that's one way I look at it is that price that, when you look at the price moves and trends, it's that trend that you're capturing before it gets to the top. And before you get that reversal. But a lot of people follow that trend and they jump on that trend when price is going up. So why would you buy something at a high when It just doesn't make sense,
Yeah.
So it's really how you focus on the market with a financial lens versus an economic lens. And then the
I really
last,
like that.
yeah,
Real quick, because I'd never actually heard that comparison. And for me, when I think about Bitcoin, a lot of people specifically say like, "Oh, it's the scarcity, right? It's the supply and demand that's going to make us go to the moon." And while that may be true on some levels, I'd never thought about it through the financial lens of like, why do people buy it at the top? Why were there a huge demand of people at 69,000 Bitcoin versus right now at 19,000 when like it's still the same asset and everything. And it's neat to me that technical analysis helps bridge that gap of basic common sense economic supply and demands to putting in this crazy psychology and FOMO that comes with assets that aren't your typical, economic devices.
yeah.
So
And
that's fascinating to me.
my whole goal is measuring that. I'm trying to measure. It's not the easiest thing in the world just to measure psychology in a quantified way.
Yeah.
It's really hard.
Sounds really hard. Yeah.
Yeah, it's not easy, but it's something that we can learn over time. And then the last tenant, we had the first one was markets discount everything, and then price moves and trends. But the third one is the key one, and it's probably the most controversial, is that history tends to repeat itself. And this is where the whole fear and greed comes in. When you look back in history, you go back 50 years, 100 years, it's that same human nature of fear and greed that produces markets, right? So if you look back at 50 to 100 years, that same human nature is buying and selling and creating these patterns, which I have found either consciously or unconsciously that these patterns are being created that people don't even realize they're creating. And if you do a historical analysis of what's going on and a price breaks out of a certain trend, 28 out of 30 times over the last 10 years, and it created a 15% return every time that type of pattern broke to the upside, most likely that same human nature of fear and greed is going to create that same pattern. Now, it's not perfect, but it's a tool to let you know that history tends to repeat itself. As long as fear and greed's in the market and it's in our human nature, I'm going to stay employed. I'm going to keep trading, and I'm going to continue to make money. When is that going to go?
You're going to be around for a while.
Go away. I mean, it's fear and greed. We're wired that way. When if the market's going against you, you're like, oh shit, I'm losing my money, and you get out, and and they're like, oh, I got to get out. So that whole mentality is what creates these patterns.
Yeah.
Yep.
Yeah, I think you're going to be employed for a long time. As long as humans are around, fear and greed is going to be a thing,
Yep.
So,
it's just something to, it's a passion of mine. So that's why I like doing it. So,
yeah. Okay, so that actually kind of touches the next question that I'd written down on the outline, which is before we dive into like fibs and TA specifically, we're going to talk about why psychology is so important, and like that's why, because as humans, we're trying to pull ourselves out of our own human perspective and figure out what all the other humans are going to be doing, and TA and historical analysis and all of that kind of stuff is just the tool that gets us there. Do you want to touch on any of those? Oh, sorry, Pigeon, please.
I actually have a quick question, and this might be going too deep, so let me know if I'm diving headfirst into something. But what is the process actually? So you're trying to quantify human psychology and how that affects the market. That's accurate, right?
Yeah. My whole goal is to measure the psychology of what I guess a lot of terms you might see are. What's the social mood? What's the mass psychology? What's the mass that's driving the price? Trying to measure where the direction is going based on that psychology is what I'm trying to figure out.
I guess where I'm getting a little bit lost in my own head is I don't understand what the indicators would actually look like. So are you thinking, is it a matter of I'm seeing behaviors occur in this market or in this environment over here, and therefore I know that maybe that will spread to this environment over here?
Well, the way I approach it, and it's labor intensive, but it's the way I like to do things because I'm old school and I like to be in the charts. I don't really use a lot of algorithms or anything like that. It's more old school, and I like to be in it. I look at every asset or whatever I'm looking at individually, and I'm measuring the psychology of that market. So if I'm looking at Bitcoin, I'm only focusing on that market. I don't care what's happening in other markets, because I mean, a lot of people will look at, correlations, and there's nothing wrong with that. It's just another way of analysis of stock market's going this way, the dollar's going this way, it's affecting Bitcoin this way. But to me, I just look at them all individually, because to me, the players that are in that particular market of Bitcoin might not be the same people that are in the dollar market. So I'm measuring the psychology of what's happening in the dollar market separately than I am the Bitcoin market. Can they correlate and change and correlate together? Sure, absolutely. But I want to measure the psychology of what's happening in that particular market. If some of that money flows to that other market, then that's when the psychology and my indicators will probably say, hey, this market's pushing this way, this market's pushing this way. But I like to look at them all individually. It does take time, because you got to look at them all individually versus, hey, let's put a spread up here and we'll do this and this and work at it in a different way. So that's the way I do it. I look at it as that asset has its own psychology.
And then you would kind of measure that quantitative result in, like, as opposed to, we measure distance in meters, you would measure that in what you referred to earlier as like social mass, almost like the weight of that indicator.
Yeah, and that comes down to the definition I had. The weight of numerous indicators and principles prove otherwise. So I'm using those indicators to measure that psychology. Now, I mean, I can touch on a few of them when I go in to talk about my fibs, on how I look at certain indicators to drive that thought process. So, and then that's where your output would be based on that.
Okay, sorry. Maybe I'm jumping ahead then.
No. Actually, I think that's a great segue. Before we move into fibs, I just point out again, like I mentioned, we're going to put all these resources down below. But Fibo's provided some solid resources if anybody listening wants to dive more into all of these concepts. A couple of these books, a technical analysis of stock trends. We've got a technical analysis, the complete resource for the financial market.
Yeah, now those two are traditional technical analysis. Like if you really want to learn about support and resistance, and you want to learn about patterns, like triangle patterns, and just get that traditional pattern recognition, those are that's the classical TA. You're looking for patterns and going from there. So that's a good start for anybody that wants to kind of start to dive into what technical analysis is, and learn from there. And then you can get into more intricate stuff beyond that. But those are good starters.
Right. And so then that's like what we were talking about at the beginning of the conversation. And then we moved on to psychology of TA. So a couple of resources there would be Sway, the irresistible pull of irrational behavior. That sounds fascinating. And then Trading in the Zone, master the market with confidence, discipline, and a winning attitude. And so both of those focus more on like the psychological aspect of TA, right?
Yeah. And if you want to look at it like the main thing with anything that we're talking about is emotional control. You are trying to, because when people ask me about looking at markets, I give them more psychology books than I do trading books. Because to me, you're really trying to not so much measure the psychology of the market. You also want to measure your own psychology. So when you go and put a trade on, if you have a buy or a sell in the market, I don't do this anymore, but I did it for years. You journal your trades, and you actually write down what you're feeling at that point in time, because you want to know, you want to control your emotions, and you don't want to make your emotions make you make bad decisions. And a lot of times that's what happens when you have FOMO and those kind of things. It's the emotion that drives your decision, and you really need to master that and control those emotions. So that's why I like a lot of psychology books, to help you maintain that emotional control when you're in the market. So you're just like, oh shit, it went $100. What do I do now? That kind of thing. And then all of a sudden your mind's like completely, you ever get to that point where like something goes on and all of a sudden you're blank and you're like, what do I do? In any life situation that comes down to. So
This is why you always slap me at mini golf.
Yeah, because I have that emotional control.
Yeah,
I go
right.
full tilt.
I missed a putt. Big deal. I'll move on to the next one. But yeah, I actually journal my golf.
You're putting, yeah, the mini
So
golf.
how did I
Yeah.
feel when I did that? No, I don't.
Yeah, I like to say emotion's the enemy. I mean, it's a tool too, but I find myself whenever I'm hovering over the buy button, I take a second and I'm like, am I saying I need to buy this, right? And if I am saying that, that's a warning light in my head to be like, all right, wait, back off, don't click the buy button, wait for a little bit, and let's think about why we have this feeling of need to like buy right now. And I think for me, that was something that I relaxed into dollar cost averaging. When I just turned on the recurring buys and the roundups, I had this mental thing of like, I'm okay now. I don't have to like freak out over the markets because I know that I'm accumulating, which is what I personally care about. So I think for everybody, you got to find that whatever it is, that tool or that practice or, whatever that makes you be like, I can relax because I've done X, Y, and Z. I don't need to like force myself into a FOMO situation because FOMO will mess you up.
For the beginners that are just like maybe not super familiar with this whole like Zen, like empty your mind sort of approach to finance, I guess in general, highly recommend.
No,
I didn't hear you. I'm sorry.
No, I just said it's a cooler way of looking at it.
It is a cooler way, and
I'm just messing with you. Go ahead.
For like diving into it, I highly recommend reading the Stoics. As far as just philosophical side of things, people like Marcus Aurelius or Epictetus or Seneca from the Greek traditions, they wrote some really incredible works on how to actually do this in not just financial markets, but your everyday life, how to understand that the sky's not necessarily falling and deal with that psychologically for yourself. Just for those that are just getting into it, I highly recommend those reads.
Totally agree. I've learned a lot from reading that type of literature because it helped me learn what the golden ratio really is and what it means when it comes to Fibonacci. So you'll learn a lot by perusing through those for sure.
Dude, is that another perfect segue?
Yes, it is. Yes, it is.
We're
So let's move on. Let's move on to Fibs.
Wait. One other thing real quick. You're talking about John was when I go to put a trade on, I already know what my sell, what my stop, what everything is before I even put that trade in. So to me, my emotion's gone. Like if I go in there, I already have my profit and loss target. I already have this. I already have my stop in case that, those kind of things. So I already know what's going on in the market. So it takes my emotion out of it. So, but people will learn that over time that you'll have to, when you go to put a position on, you have to be ready to know what's going to happen, or because you don't know what's going to happen. So you gotta kind of manage that or mitigate that risk ahead of time before you even put the position on. And you kind of hinted on that too with the way you approach it. It's just that people got to know before you click that buy button or sell button. Measure your emotion. Just take your time and figure out what you're doing before you do it. There always will be another opportunity. You don't have to
that one opportunity isn't make or break every single time.
Exactly. All right. Segue.
Cool. Woo! Let's do it. All right. So Fibs. So we've got Nick, if you wouldn't mind hitting that the chart to explain the madness, the trading view chart. I'll dive into Fibs for us. How does the ratio play into the way that you specifically chart? Because you're going to write a book about this, Fibliminal thinking.
Well, I got so many notes. It's everywhere. But first of all, let's talk about what Fibs. Kind of talk about Fibs first.
Sure.
Actually, let's flip up that. Do you guys have those 3 slides that I sent? Let's throw that up first before we get on to this crazy chart stuff.
Why Fibs matter in charting?
Oh yeah, there you go. Sorry, Nick. That was my fault.
We kind of touched on most of this, but this is where I really want to hit it home here first.
Okay, cool. Yeah, let's do it.
Before we go into that chart, Fibonacci sequence. We kind of talked about it earlier. What creates the spiral? And this is that formula that I was talking about, the 1 + 1 = 2 and so on off into infinity. But the sequence is cool. and there's so much to learn from it, but you're talking 300, 400 level technical analysis when it comes to timing and cycles, and it gets very math heavy. I do use it for that, the sequence itself, but it's the ratios that the sequence brings to us. And if you flip over to the next slide, it's the ratios. If you take any two numbers along the number sequence and you divide them into each other, and I'm just using the examples of 144 divided by 233 on there. It is all going to approximately 61.8%, which is that golden ratio. And then if you reverse it, and 233 divided by 144, you're getting the capital fee, which is the 1.618 versus the 618. And then if you take any number and go two numbers over, you get another ratio. If you go three numbers over, you get another ratio. It's these ratios that are key for me to measure the proportion of the market, not necessarily just price alone. I want to know the proportion of what's happening in the market versus the price. So that's where the psychology to me starts to come in. So a lot of people ask, well, why in the hell does these numbers matter in markets?
Right.
This is just a mathematical formula, right? And
Sure.
Why does this matter? If you flip over to the next one, and this is where the fun begins, and we kind of talked about it earlier. First of all, you got the spiral. The
right.
1, 1, 2, 3, 5, and it spirals off into infinity. Yeah. And you'll see me on Twitter every Friday. I put out a happy Fibonacci Friday.
I love it.
Spiral into a good weekend.
Yeah.
It's just because I'm a dork, and that's what
it makes a lot of sense, though. Yeah.
But that spiral, then you go into the nature stuff, and we kind of talked about that earlier. I just gave an example of a sunflower. The spirals of the seeds are proportionately there based on the ratios. If you go into a park and pick up a pine cone and look at the numbers clockwise versus counterclockwise, you're going to get Fibonacci numbers 8 and 13. So that's in nature and those kind of things. Then I also put on a music octave on the piano. So you got
it's fascinating to me.
It's crazy on how all this kind of works, but it's a phenomenon that's really hard to explain. Like I was telling you guys earlier before the show, been doing this for 2 decades and I still can't explain it right, but it's there. I wouldn't continue to do it if I didn't see the results. But the octave is that there's 2 black keys and then there's 3 black keys, which make up 5 black keys. And then there's 8 white keys that total 13. So you got 2, 3, 5, 8, and 13 just in an octave of music. Going
that's
from one
awesome.
to the next. So that's awesome. So that's built in there. Then and you'll got a lot of groups in music that you'll see that they use the Fibonacci sequence a lot to build their music. And then just the human portion of us is the top half versus the lower half, and it gets kind of weird. But everybody has this kind of 61.8% bottom, 38.2% top, and we kind of break ourselves in that kind of ratio. And then. So this is the leap that's really controversial and hard to explain. If that human nature of fear and greed is there and it's in all of us, and we're built in nature based on these Fibonacci numbers and sequences and ratios, that human nature goes into markets. And that's where the Elliott wave theory started from. And that's why that's that next thing where you have 5 waves that work to the upside in a motive wave. And then any correction against a trend is in 3 waves. So you got 5 waves up. In this scenario, it's an up wave, but you can do it the opposite way too. But you go up 5 waves and you reverse 3 on a correction. So you got 5 up, 3 down. And then if that holds, and typically it'll hold at a Fibonacci level or a ratio, and that's what we'll kind of talk about a little bit. But if it holds there at that support and it wants to continue to the upside, then it'll go another 5 waves to the upside. So you got a 5, a 3, and then another 5, which gives you 13. So 5, 3, 8, and 13. And then it's fractal in nature. So what I mean by that is every one of those waves, like that wave 1, can be broken down into 5. Which is the same concept. And then you can go even further, and each one of those little ones can be broken down into 5, and so on. And then even further to the upside, every wave can be broken out into more and more either direction. So,
Wow.
so it's fractal in nature. So I started diving in Elliott Wave for many, many years, trying to figure all this stuff out. And what I found, I mean, what it's really based on is a lot of the Fibonacci ratios. And if the ratios work with the sequences that the Elliott Wave is working itself out, that's where you start to find this conscious and unconscious patterns. Yes, there's the surface patterns that everyone sees, absolute highs, absolute lows. Everyone's looking at the same chart. Everyone's looking at the same support and resistance. But if you start going down fractal in nature and you start looking at different time frames, and these patterns are working in all these different time frames, it's not surface. That stuff's happening and people are creating them without even knowing they're creating them. So I use Elliott Wave for a guide. I don't trade off of Elliott Wave, but I do use them as a sense of guide and direction of where price could go based on that. And then I use my Fibonacci analysis to really give me the sense of my entry and exit points. So that's where all this Fibonacci stuff comes from. I know it's very controversial and it's hard to explain, but the basics is human nature is in markets, and if the Fibonacci sequence is in nature, and we're in human nature, it's in markets.
It's in markets,
It's just all kind of intertwined.
Yeah.
I hope I explained it in this crazy world we live in, but that's just the way it is.
No, I love that. That's a fascinating, like thinking about the ratio in particular is a fascinating way of looking at it. And I don't personally think it's that big of a leap to say that if it's in humans and it's in nature, then it's in markets, like because markets are human, right?
Yeah,
so,
I was at first, for many years when I first started doing all of this. But then as I started to do more analysis and dive deeper into the rabbit hole, I started seeing things that unless you really dug down in deep, it's amazing the patterns you find. It's crazy.
Yeah.
And that's what kept my passion going. Like, I want to keep learning more and more about this as I go, because it's just one of those things that there'll never be an answer.
Right.
But I learn more and more about it, and I can apply those methods to what I do for a living. And like you said, it's a passion of mine. So it's not like I'm working, because I really enjoy it.
You enjoy it.
And I get to do something that I enjoy every day.
Yeah.
So, all right. So
the chart,
now
right?
Now we can move on to the chart.
Awesome.
Might be a little tough to see, but a couple of things that I do that I use, because Pigeon started to talk about this a little bit when it comes to the indicators itself. The middle pane there is the ADX, which is the average directional index, which actually measures trend strength in the market. So there's that black line on that first pane, or I kind of moved out of the picture, but that middle pane is the ADX. And basically what we're watching.
When you say the middle pane, real quick, Fibo, we've got a top pane, a middle pane, and a bottom pane, right?
Yeah. The top one is price, the middle one is the ADX, and then the bottom one is the RSI. So
I see that.
We're looking at those squiggly lines in the middle there.
Right.
So the black line itself is the average directional index, which is just measuring trend strength. So if that is increasing, the black line that's down there, if that's increasing, that's telling you that the momentum for trend is increasing. So, but then you also have a red and a green directional index line that's plotted along with it. And the green positive directional index or the green line is the positive directional index, or in other words, the bulls. And then the red negative directional index is the bears. So, and then it gets in. I don't want to get into a bunch of details, but then there's different ranges of where the ADX can be. 0 to 20 on the oscillator itself is very weak trend. Anything that's between 25 to 35 or 20 to 40, somewhere in there is a strength building zone. And then if it gets above 40 or higher, it's still really strong trend, but it's also getting a red flag that it could be getting to an exhaustive phase. Take an example, take a baseball, throw it up in the air as quickly as you possibly can. It goes really quick at first, and then it starts to get up to this point where it starts to stall and come down. Right. And that's what we're trying to measure, is that momentum that's happening in the market of when that trend can start to ease off and start come back in the other direction. So in other words, when you look at all these squiggly lines, it's like an EKG to a doctor. It's the heartbeat of what's happening in the market.
Yeah.
So if you look back historically, you'll start to see patterns in that trend, in that indicator. And if you're a doctor on an EKG, you're going to take an EKG, and then a year later you're going to do another one, and you're going to look back and see if there's any differences, to see if there's anything wrong, right? Same thing with the ADX. Is you're really looking at it and you look back historically, and you're going to say, okay, this is acting differently than it did here, so that's heads up. Let's dive in and learn what's going on. So that's what the ADX is, and that's one of the things that I use in my whole threshold theory. The other one is a little bit more difficult, is the RSI, and a lot of people use the relative strength index as an overbought, oversold indicator, which is what it is. But what I use it for is I apply what's happening in the price chart, and I look back historically, and I look for trend line breaks, and I look at patterns that have happened in the past, Fibonacci levels that have held as support and resistance, where all of those kind of match up. I look at that, and I have these vertical lines on the chart that come from price down to the RSI, and you can see that I break the RSI down into different zones.
Right.
These zones is what I look at historically as the psychology changes in the market. So when that flips to a bull zone, that is a mass, and that's a psychology change for me, that the market is switching trend psychologically. And to me, that's where I go in and I apply my threshold theory of when to buy, when to go in, when to sell, those kind of things, based on the measurement that's happening in the bulls and bear zones. Currently, we just had a nice little run up in the market. Everybody thought we were back in the bull market, but when you look at this daily market, it went up and touched the top of that bear zone. So it went to the extreme of where it could go, but then that resistance in price found a lot more selling interest to hold that market from going further, which kept us in that bear zone. So to me, I am still on the downside mentality of this market until that psychology gives me a sense of change. And right now it hasn't. From a little bit more longer term perspective, we're still got that risk to the downside, because my historical analysis on the RSI itself is still remaining in the bear zone. So when you take that and then you measure that against the ADX, and it's very complicated when you look at it for the first time. But that's why I have a group, and anybody that's interested can join me. But then you'll learn more and more about it. And don't get me wrong. If you want to join my group, I am not a signal shop. I'm not going to tell you when to buy. I'm not going to tell you when to sell. But I am going to be that co-pilot to help you along the way, to help you learn, so you can fly yourself. That's really what I want to do.
Yeah, this is a great time to show your group. So you're on Patreon, right?
Yeah. I use Patreon as my payment service. Yeah.
Yeah. So if
but it's a Telegram, it's a Telegram group. That's private
Telegram
group.
Yeah. So I just wanted to take a quick little break real quick before we continue on, and just say, we say that we're gingerly introducing newcomers to concepts that help them figure out the market or help them learn the next step about crypto and Bitcoin. And so while this all might feel very heady and very difficult to grasp in the 50 minutes that we've been together, Fibo's been doing this for 20 years. And what we want to do is just present this stuff as hey, there's a lot more to this market than maybe you originally thought about. There's a lot more tools out there that can help you change your own financial future. And so this should be a springboard for anybody who's watching to do more research, to figure out, maybe there's some tools in this episode that can help you take that next step to feel more comfortable with your own financial future. So Fibo's group is a great option for that. If you want to learn more about charting, if you want to learn more about being able to measure the psychology of the market, definitely check out his group. So yeah, that's
thanks. Yeah, but it's a learning environment. It's not like I'm trying to do this big thing to grow my group or anything like that. It's a relatively small group. I try to keep it that way, to be honest. I don't want to. I don't want 10,000 people in there. I usually run between 200-300 people, and that's about it. It's pretty intimate. It's a great group. There's guys that have been with me since the start. So I got a lot of people that can help when I'm not around. So it's a fun group, but it's a learning environment. It's not somewhere that you're going to join to get buys and sells. No, I every once in a while will show what I'm doing in Bitcoin. If someone
Sure.
wants to mirror me, they can, but
Right.
I don't advise it because
Right.
the way I approach things is based on my book of my short term and my long term and my risk management, which might not even be close to what you're doing. So to me, if the tools that I give you, just use it as a tool to build your own strategies and work your own stuff. That's really the whole goal. Because
Right.
I feel like since I've been doing this for so long and I have a lot of wisdom that's in this head, I like to just share it because it's like my pay it forward, and I like to teach it more than I actually like to do it, to be honest, because it's that there's just stuff out there that people can learn from and take it, and if someone takes that threshold theory that I have and builds something 10 times better, awesome. That's what I want.
Yeah, that's why we're here. I mean, honestly, that's why me and Pigeon are doing what we're doing, is because we want to pay it forward too. We've learned a lot of stuff. I've learned a lot of expensive lessons. You know, I've made a lot of mistakes, and I want to make sure that other people are prepared and don't have to make those mistakes and have good resources. So
that's why I was excited to come on, because it's
man,
like you guys educating like this is a good time.
Yeah, dude, absolutely. Thanks for throwing up Fibo's Twitter there too. Definitely give him a follow on Twitter. If you follow me and Style Pigeon, you probably are already familiar with Fibo because we hang out and we tweet at each other all the time. But Fibo, kind of like as a closing, call to arms to the people that are listening, like what would you say is like to a newcomer, if they're brand new to TA, they're brand new to crypto, what would be your word of encouragement to those people like getting started, and especially in this market?
Oh, that's a tough one. If they're just getting started,
what would you say to young Fibo 18 years ago, just getting kicked off in TA?
I would probably approach the markets a lot more as almost like a paper trade. I would do very, very small percentages of your money. Almost to the point where you're not putting any, but I don't like doing that because you got to have some skin in the game to help manage those emotions. But I would actually just take time that way. And because everyone goes through like the learning lessons, right? You go through and you get your ass handed to you, and then you learn from those lessons. You could do that without losing your ass. Just start very small, learn as much as you can. The way I kind of look at things, and this is why I kind of wanted to write the book, is there's three principles that I started off with. First thing is that accept your ignorance is the first thing, because there's one dominant aspect of wisdom, and that's knowing what we don't know. So take that time to learn other views, be open-minded about what's going on. Because like when I first started doing this Fibonacci stuff, people were like, why in the heck would you put a Fibonacci line there? Well, that led into aspire more understanding is the next A. There's 3 A's. And then the last one was accomplish something different. That's what I really wanted to do. So whenever I get an indicator, I don't think I ever use the default that the software package gives you. Play around with them, learn from them, really dig in and learn of what that thing is telling you. And that way you can accomplish something different. And you don't have to follow the masses, because I feel like you can learn more by doing your own path and just following the other person. Now, if you don't have to just follow somebody, you can just follow somebody. But the younger me, I wish I would have started off in small baby steps versus just jumping all in and saying, oh shit, Bitcoin's going to $1 million. I'm just going to put it all in. And the next thing you know, it's down. And did you use that money that you were saving for your family? Like, don't do things like that. Like do the baby steps. I guess that's about the only thing that I can think of off the top of my head.
No, I think that's great.
Just start small. Just don't
Yeah.
and learn as you go and journal. I know it's a pain in the butt, but you learn so much from journaling. Even if you do it for like 3 months and go back a couple of months in those entries and look back and see if there's any similarities, if there's any differences, you'll be amazed on what worked and what didn't and why if you just do that. So those are the two things. Start small and journal. I know it's kind of probably cliche, but that's probably what I would.
I love it. I love it. Honestly,
I wish I would have done that when I first.
I wish
started.
someone would
Cliches
have
are the
told me that.
cliches for a reason.
Yeah, exactly.
Yeah, I wish someone would have told me like start small. I didn't honestly when I started, I didn't even know you could buy a fraction of a Bitcoin, right? I mean, you can literally use $1 or $2. Like my story is my little sister, she 10 years younger than me. So when she was like 12, she was like, John, I want to like invest. Tell me what to do. And I was like, well, put $5 into Bitcoin and just leave it. And then she turned it into 150, and it's like this big deal. So start small, invest in yourself. That's really big. I really appreciate that a lot.
That's a better way of saying it. Invest in yourself.
Yeah.
I mean, because that's really what you're doing is if you start small and learn, you're investing in yourself. So over time, then you can start increasing and be more confident in whatever you're doing, trading or even dollar cost averaging.
Yeah.
You still got to learn on what you're doing because there's pros and cons to it. And you might be doing something that's kind of non-beneficial to what's going on if you don't know really what you're doing. So if you learn in those baby steps, regardless of how you approach it, you'll learn as you go.
Yeah. Me and Pigeon like to use the term dollar cost averaging for a lot of things. Dollar cost average your health, dollar cost average your knowledge. It's those small baby steps that you just invest in yourself. So, but yeah, this has been great, man. To close this out, I want to start doing something different. Especially now that we have guests. I'm a huge believer of unplugging and taking it easy because a lot of us in this space are in this 24/7. And you mentioned already you like to post on Fridays, spiral into the weekend, unplug and take it easy. So what is your way?
I also say close the laptops and open.
Yes, you do. Yes, you do.
Get out. Shut that thing down.
So on that note, how do you like to unplug and relax when you're getting away from what you do full time?
As the shirt I'm wearing, I love disc golf. That's my way of getting out in nature. But then again, I also get to play a fun game or sport or whatever you'd want to call it. I guess it's sport, and I guess call everything a sport these days.
We're there now.
But yeah, exactly. So I got my disc golf shirt
on. Yeah, I love it.
But that's one of the things I like to do because I do like getting out and hiking. I like nature. You learn a lot from just being out there. That solitude of just hiking in nature has taught me a lot. Just even learning about Fibonacci and nature and all these things, it drives me to learn more about different things. That's the way I unplug is mainly disc golf and getting out there. That'd be my main thing. So even it's funny because like even the people in my Telegram group, they already know I'm going to be gone the weekend and I'm playing. But the thing is like we talked about earlier, if you're putting on a trade and you know your buy and you know your sell and you know your stop, then you can go out and have a good time. You don't have to sit there and worry about it. You just go out and if you come back and you lose, then figure out why you lost, learn from it and apply something different next time. And even if you made and hit profit, learn from it. What did I do right? What did I do wrong? What could I have done better? Even though when you win, you can learn from that also. But knowing that you're covered and that this all comes back to that emotional control. If you can take emotion out of the market, then you can go out and have a good time.
Yep. And often unplugging helps you just reset that emotion too. I feel the same way. So this is great. If you're interested in wanting to know more about disc golf or VR, Fibo's your guy, give him a follow. But so this is great. Pigeon, any other last things you wanted to get in before we're out of here?
No, I have so much reading to do. I'm excited about all the stuff that y'all are teaching me. I hope other people are learning half as much as I am through these shows. That would be a really awesome thing to be a part of, is helping people get into this and learn more and more, and really just start to actually apply themselves in general too. I mean, a lot of the people who listen to our show, I think are already, pretty dead set on, I want to get better, I want to do better over time. But there's a lot of people out there who aren't. So I'm a huge believer in picking up skills and just becoming a little bit more than I was the day prior. That's why, we do things like, well, me and Fibo go back and forth on mini golf, trying to beat each other. And it's mostly just me trying to get up to Fibo's level.
Yeah.
But, I also play, 25 hours of Rocket League a week, just because I like to have a skill that I'm trying to get better at. It's super motivating to me, helps me deal with my clinical depression and all that as well. So I'm just happy to be here and be a part of this. Fibo, thanks so much for coming on and giving me another, half a library worth of reading to do.
Yeah, no problem. And you and everyone else that's watching, you don't have to join my group. Just hit me up on Twitter if you have a question, and I'll try to get to it as quickly as I can. It doesn't have to be a group thing. It could be, hey, just got a question about this or that. Just throw it out there. If I have time, which I try to get to the questions as quickly as I can. But I am there as a resource to help teach. So that's what I like doing. People for the group are ones that really want to get in and trade, and it gets a little bit more in depth. It might not be for you. So if you just have simple questions that you want to learn from, just hit me up on Twitter and just write me there.
Yeah, man, I really appreciate you being a resource to everybody. I've learned a lot. I know Pigeon's learned a lot. Big thanks for coming out. I'm really excited for playing golf on Wednesday with you. If you're into VR and you're listening to this, come play golf with us on Wednesdays. We have so much fun. So yeah, with that, I want to wrap it up. Big thanks to RoundlyX for sponsoring. Again, if you go to roundlyx.com, you can sign up with code Gingerly. That's the name of our show, and get $4 in Bitcoin when you do your first roundup. And with that, we'll be back in 2 weeks with another guest. Can't wait to announce that. Fibo, Pigeon, thank you all again, and have a great weekend, everybody.
Thanks, guys. Have a good one.
Thank you so much.